I'm Sandy Ray, founder of Sandra E. Ray, CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, I want to talk about donation receipts. As nonprofit professionals, you face multiple demands on your time and you're under lots of pressure. It's easy to think that donation receipts aren't important or that they only matter because the IRS requires them. But that's not true. Donation receipts are important. Yes, they help you cover your bases with the IRS, but they can also help you track your donations and build successful donor relationships. Prompt and thoughtful thank you letters are central to effective fundraising. So why do donation receipts matter to donors? They let donors know that you have received their donation. Everyone who's purchased something online has that moment of question. It's like, did my payment go through? Essentially, your receipt lets the donor know that you've received the donation and all is well. Donation receipts help donors track their finances. And if the donation is in excess of $250, the donor must have a written acknowledgement before they can claim that donation on their income tax return for federal purposes. Plus, a donation receipt is a chance for you to show that your organization is responsible, transparent, and most of all, grateful for their support. So why do donation receipts matter to our organizations? Donations reduce the tax owed by the people and the businesses that donate. Because of this, the government is encouraging donations. By providing receipts, you let the donors know that their contribution is tax deductible. It also makes donors feel appreciated and acknowledged, increasing their trust and their loyalty. Proactively sending out donation receipts is key to building long-lasting relationships with your donors. It's a perfect opportunity to show your appreciation. And think about this. For a first-time donor, this may be their first interaction with your organization, and it could have a huge impact on whether they decide to support your organization in the future. So when do donation receipts have to go out? Well, there's virtually no rules about when you must send out an official donation receipt. Many nonprofits send out receipts out year-end for tax receipts in January and February of the following year. But donors expect to receive a thank you for their contribution no matter what the size, and they expect it soon after they make the gift. So it's advised to send out a donation acknowledgement within 24 to 48 hours of the donation being made. Now, this can be achieved through automating the process in issuing donation receipts. And those automations may vary depending on the size of the donation. If you're running a campaign, a texting campaign where you receive a $10 contribution, that automation may just be a reply as a text. If you're receiving a check for $10,000 or a stock gift for $10,000, that automation may be a letter that is sent to the executive director and or board members for them to personally sign and mail out. Now, the IRS requires donation receipts for certain situations. We're going to cover those a little bit. Of course, the one we all know is donations of $250 or more need a tax receipt. But we also are required to do tax receipts when donors give us a donation and we in turn give them something worth $75 or more. We're talking about those gifts, those thank you gifts, like we've all seen PBS give out t-shirts and mugs and other things at different giving levels. Those have to, that value, if it's $75, has to go on that receipt. And then finally, whenever a donor asks, we are required to give them a receipt. There's no legal requirement for gift acknowledgements for contributions of less than $250, unless the donor receives something of value, as we discussed. So what does the IRS require on a donation receipt? The first thing is the name of the organization that received the donation, a statement that you are a public charity recognized as a tax-exempt organization under IRS Code Section 501c3, the name of the donor, the date of the donation, the amount of the cash contribution. Now, if this is a non-cash contribution, you need a description of the item, but not the value. That's the donor's responsibility. The amount of crypto or stock donation. You need a description and good faith estimate of the value of goods or services that you provided to the donor in exchange for their gift. Again, another example is a $100 meal for a $500 a plate gala. Or you need a statement that says no goods or services were received in return for this gift. Now, one thing I want you to be aware of, hopefully you are, if you receive a non-cash gift valued at $5,000 or more, you must have a signed appraisal. And if you sell any donated property that has a value of $500 or more within 3 years of receiving the gift, you must file a Form 8282 donee information return. Now this goes into the IRS, it goes to the donor so that they know that there was a difference between the donation that was claimed and what you ended up selling it for 3 years later. The exception to the Form 8282 is if the property was distributed for charitable purposes. For example, say you received a donated vehicle. You then in turn gave that vehicle to a constituent so that they could obtain or retain a job or attend college or whatever else they needed that vehicle for that's part of your programming. Now, if your organization provides intangible religious benefits, be sure to include a statement like, the organization provided intangible religious benefits or services to donors. Another thing you might want to include is your mailing address and your TIN number, your tax identification number, your employer identification number. They're kind of interchangeable. Although those are not required, many donors need them for their tax return purposes. And I want you to be careful about year-end cutoffs when we're talking about donation dates. The day the charity receives the donation is the donation date. For mailed donations, such as a check, that's the postmark date, not the check date, not the day that the check arrived in the mailbox at your office. For online transactions, it's the transaction date, not the settlement date. And for donations delivered to your site, it's the delivery date. Make sure you report the correct date on your donor receipt. For a complete listing of the IRS requirements, see publication 1771, Charitable Contributions, Substantiation and Disclosure Requirements. Now, I've included a link to this in the description of this posting, so you can just go there, or you can go to the IRS website and type in PUB space 1771. It'll come up. So let's talk about year-end tax receipts. That's the time of the year that's prompting this conversation. Sending out year-end tax receipts is a great way to thank your donors, to acknowledge how much their donations mean to you. It's a convenience for your donors so that they have ease of record keeping for tax purposes. But it's also a great opportunity for you to set the stage for giving for the upcoming year. And although it's not mandatory to send year-end tax receipts, it's a nice gesture and it makes tax time easier for your donors. So moving forward, donation receipts can be confusing and time-consuming, but they're an important part of your nonprofit's fundraising efforts. Make sure that you familiarize yourself with the donation receipt requirements and then invest in some tools that make the process easier for you. This will give you time for interacting with your donors. I hope this was helpful, and I want to thank you for joining me today. Remember that creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.